Hello, everyone, and welcome back to the main stage here at Lending 3.0. And now we have a special fireside chat with one of my favorite CEOs, Anne Bowden of Starling. Hello, Anne. How are you today?
Hello, and thank you for inviting me, and lovely to see you again.
Thank you so much. So we're here to talk about lending, and I have to apologize. And I'm apologizing more and more when I say this. We of course have to start off talking about COVID and the pandemic. It sort of impacted so much of our industry and our lives right at the moment, and I think all of us are looking forward to a day where we don't mention the pandemic, but hopefully that is coming sooner rather than later. But I wanted to talk a little bit about Starling and some of the stuff that you've done over the past year. It's Starling is kind of in that camp that's normally called a challenger bank, a new bank, as opposed to the incumbent banks on the high street, especially in the UK, like Lloyd's and Barclays. And you're one of the few in that camp that really took part in the UK government scheme for COVID loans for small businesses. And I wanted to know a little bit about how that was achieved at Starling. I'm very interested in sort of procedure and operations. Was it kind of a decision that everyone made, saying, "Well, we're a bank. This is what banks do," or was it kind of like a startup-y pivot? Let's go for this new market. Just kind of talk us through how that came about.
Yeah. Well, first of all, I need to do a bit of a backstory, really,
Okay.
about where we were and the environment when the pandemic hit. We had been very, very successful in building our retail proposition. We have, 2.3 customers now, and we have about 230,000 business customers. And back in February, March, we were at the tail end of building lending systems to small businesses. We were fortunate enough 2 years ago to be awarded a 100 million grant by the Innovation Fund, which is a fund to give big grants. And we have the biggest grant, which is 100 million, to banks that compete with the big banks for business accounts. So in the UK, the business banking market is highly consolidated in the five big banks, and there was a need to open up that market. So we were awarded this grant 2 years ago, and we've been spending the money building the best technology in the world for business customers with highly automated onboarding and lending systems.
Mm.
So when the pandemic struck, we're in a pretty good position with our technology and our organization. And the first thing that happened was that, like all organizations, we were quite shocked. We wondered, would we cope? And we coped very, very well. We transitioned to working remotely very quickly and very easily. And we
Mm.
launched a few new products very quickly. We launched a connected card for consumers, and that was self-isolated, isolating. We launched check imaging. So we're in the mode of this is an environment where we are very, very well positioned. Let's
Mm.
really see if we can respond to what customers really want. And then the Chancellor of the Exchequer in the UK decided that it was very important to get lending out to small businesses as quickly as possible. And there were schemes being talked about. And very, very quickly, the Chancellor agreed with the big banks a new scheme to get small loans of up to £50,000 out to the small business. And we we came naughty. We didn't really out about this in days before launch, but we knew very well that was going to be the deciding. That was going to be a very, very critical litmus test on the success of Starling. We
Mm.
either decided we were going to embrace this scheme and do our best in order to get as much lending to these customers as quickly as possible, or we were going to stand in the sidelines. And we decided to work around the clock. And we launched only a few days after the big banks. But we had a huge advantage. We had new systems, all our data in one place. We had the opportunity to process these using state-of-the-art fraud processing algorithms, and we were very good at it. So we've now managed to lend something like 1 billion of lending to a part of this bounce back loan scheme, which is 100% government backed lending. And we've also done about 500 million of other lending under other government schemes. So we felt that we had customers at these difficult times, and it was a transformational moment for us. We needed to be there, and we got the job done. We had, it was pretty good. We had lots of customers coming to us saying we'd saved them a bit.
Yeah, no, I agree. I think it was a transformational moment. It really made Starling stand out amongst that, amongst that club as moving into the playground of the big boys, so to speak. So no, I agree with you. But maybe I can talk a little bit of a follow-up question. Just you have so much experience in the banking industry. So as your banker's opinion, do you think the loans have worked? Have they achieved what they set out to do?
Yes.
Mm.
When it all started, I was quite skeptical about, you this in customers being able to repay. Back in March, April, we didn't really know what was going to happen. As we went into May and started making the first loans, as an industry as a whole, we didn't really know sort of whether these loans would be successful in saving businesses. Since
Mhm.
then, I've been more and more optimistic every month in that we have lots of businesses that are very, very resourceful, that have pivoted, have found new ways of revenue, have, gone remote. Um, Businesses use this opportunity of becoming digital businesses. So I'm far more optimistic now about the success of the scheme than I was back in May, to be honest. Yeah, it was scary at the time. Okay, we had a
Mhm.
situation
Very.
where government was telling us to do this, and I was
Mhm.
involved in lots of different meetings with Treasury and British Business Bank, trying to figure out what we're going to do and how it's going to work. And as an industry, we got together and figured it out.
Mhm.
And we were building we building the ship while sailing in some respect. But that is what we had to do. We had to get on with it, and I'm proud of history responding in the right way. Uh,
Mhm.
and it's something that needed to be done and was done well.
Thank you, Anne. I mean, I agree with you. I think it was a very scary time around spring last year. I think we're still recovering from that. Hopefully, there'll be less scary times going forward. So moving on, still continuing. Of course, we're talking about lending all day today. So you recently spoke with Sifted, which is out of the FT, about Starling possibly buying a lending business. Can you tell us a bit more about that?
Mhm. Yes, we are a business that's actually grown on the basis of providing current accounts, checking accounts to consumers and small businesses. And we are very, very successful at that, in that our customers are a demographic that use our card and our services a lot and actually hold quite high balances. And we have more than 5 billion on deposit at the present. And although we have our own lending businesses, which we are growing very fast, and we've done sort of billion and a half this year, we also want to buy some lending businesses to keep up with the growth that we're experiencing on the deposit side. It's a very interesting market at the moment. I think lots of changes are happening. Uh, People are looking at their business models and figuring out what they will look like, especially in the peer-to-peer space or the non-bank lenders. And therefore, yes, we're on the lookout. No news yet. Nothing in our sights yet. But we have aspirations in that area.
Okay. Well, okay. You're being coy, but we'll keep a lookout for when the news comes. When the news comes eventually. But so continuing on a little bit about lending. So this is again, I'm asking about your sort of experience and your knowledge. The whole theme of this event today is lending 3.0. Where lending is going, and we've had a lot of sessions that talk about the relationship between banks and SMEs, which you touched on in our talk, and sort of that bridge between lending and payments, and whether or not banks kind of still belong in that journey. So this is really sort of a broad, overarching question in terms of what does lending 3.0 mean to you?
I think Lending 3.0 has different aspects. I think the first thing we have to consider is post-pandemic, post-government um, intervention and government-backed lending, and what it will do to the industry, and that what that will do to different sorts of lenders in the market. And secondly, whenever something dramatic happens, people tend to focus on their own problems and ignore big technology changes that are going on around them. And that's what happened in the big financial crisis. So I think I'll pick that apart. First of all, what's going to be the impact on the lending market of government-backed lending and this huge change has gone. I think there's going to be a lot of structural change in SME lending.
Mm-hmm.
Consumer businesses have got used to very low rates, subsidised rates through government backing, and many players in the market not being able to reach the lows of um, interest rates that the government dictated as part of the bounce back loan scheme. So the government dictated a rate of 2.5%, and for many non-bank lenders and peer-to-peer lenders, that rate is just too low to make any money. And therefore they've been out of the market for a period of time. Some of them have actually participated in CBILS lending, which is 80% back lending, where they can charge higher rates. But this is a real change of the market and has shocked some organisations. And the question is, when these very small businesses have been paying 2.5% for their loans, will they ever go back to paying more, and how long? So as well as having over-indebted SMEs, you've got SMEs that got used to these rates, and how will they recover? And even with CBILS lending, which is 80% back lending, um, I think that there will be a need for government in that space for a while,
Mm.
and then a while to correct. So the dynamic of the players have changed,
Yeah.
and the difference between being a bank and being a non-bank. There's obviously an advantage in being a bank in this environment, in that we have access to Bank of England liquidity, which which Starling doesn't actually need, but whatever. There are advantages for being a bank in this environment, and non-banks um, have been put in a very difficult situation. But we also have the what's happened on technology. I think whilst we've been because we've had to move very fast in this environment, and everybody's been. One of the interesting things is we've been productive in the last. Starling is known for agility and for speed and for velocity, um, you know, but it's nothing like a Starling remote. When a Starling is remote, they have so much time and energy to really focus on the customer problems. We have really made leaps and bounds in the areas of artificial intelligence and machine learning.
Mm.
And I think that is going to be the big breakthrough that this industry is going to benefit from in the next year or two. Because
Mm.
I'm always optimistic about the future.
Yeah.
I think that technology is going to be so enabling, um, and the lending industry is going to benefit from.
Mm. No, I agree. And there's a lot of people are, in order to be optimistic and look for some sort of silver lining, especially with the pandemic, there seems to be a lot of accelerated innovation, accelerated progress, which hopefully will benefit more people in the financial services industry. So this is great. So I'm gonna have a final question for our chat, and so I'm gonna go and focus more now on Starling. Can you give us maybe an update on what's next? What can we expect from the bank this year?
Yeah, I think that we're still growing very fast in the UK. We are launching lots of new products for SMEs and business customers this year. We are we have a lot to do when it comes to helping um, businesses to survive. Um,
Mm,
we've managed to lend a lot of money to them. Now we have to give them the tools to survive, and that's just as important. And we are developing lots of news so that businesses can have the instruments they need so they can navigate into the future. Because the banks and the government have provided the financing for some of these businesses to survive the last couple of months. Now they need, in some respect, have the tools to start navigating as we come out of the lockdown. So that's where I'm going to be.
excellent. And thank you very much. I appreciate you sitting down with us. And have a great rest of the day. Thank you.
Thank you very much, Liz.
Excellent.